Good morning, guys. Matt from Blaze Capital here. So today we're going to go over different types of orders, and we'll kind of run over how the level 2 works and all that kind of stuff too, just to make you guys a little bit more confident in trading, and it'll also kind of point out why we do or don't choose certain order types in which situations. So the first thing we're going to look over is the S&P. The S&P is one of the most widely traded vehicles in the world, so it's very liquid. There's lots of shares around. It's really easy to get in and out, and you're not going to take too much of a spread difference in your buy prices. So this is a practice account. So it doesn't work the exact same as real life does, but for display purposes, it'll be good enough for today. So the first thing we're going to look over here is level 1. So the level 1 shows you the bid and the ask prices here. The bid and the ask on your level 1 are going to be different than the level 2. So with level 1, these are called lots. So these are multiples of 100. So over here you see the actual share count here, but this is multiplied by 100. So there's not 4 shares sitting here, there's 400, sorry. So you have to multiply these by 100 in your broker. Some brokers are going to be different than others, so I can't 100% certainty say that it's always like that, but in the case of Questrade, the level 1 is always board lots, and the level 2 will be the actual share count themselves. So why is this important? So this is really important because depending on what you're trading, you're going to choose a different kind of order. So with the S&P, I'm always confident with doing market orders. You're still going to want to check the spread though. So like I trade a lot of options, and sometimes the spread can be like 10 or 20 cents, which is hundreds of dollars. So you still don't want to just smash the buy button. You always want to confirm before you're hitting that. But for trading shares, most of the time you're going to get a pretty good fill. Whereas if we pull up a different stock, so we all like Body and Mind, so we'll pull that one up. So this one's been a little bit more liquid than normal lately, so I might have to find another example here. Actually, that's okay here. So the bid size. So when determining if you're buying or selling, you want to look at the level 2. So if I was going to sell 50,000 shares right now at market, it would eat all of these shares up. So if I was selling at 155, I'm going to get filled at 155. Nope, we're probably going to go all the way down to probably in the 130s. So your average fill price is probably going to be around 140. And if you had 50,000 shares, that's a lot of money, right? Same as if the buy. This is a really bad example because there's a lot of asks stacked up, but if we can find a different company here. This is a low float one I was trading for a bit. Yeah, so here. So this one, if we were buying, we'll say 50,000 shares again, and you hit market buy, it's going to eat up all these orders again. So if you think you're buying at 113, you're actually probably going to get filled closer to like 125, 130. So if we pull up a chart here, so I remember watching this one here. Oh, sorry guys, sorry about that. So I was watching this one day. It's a marijuana company. So somebody hit market sell here and dropped the price all the way down to here. So say you had, I don't know, 50 or 100,000 shares and you're just like, get me out, and you hit market, it eats up all the bids all the way down here. And so then it got bought back up because that was a pretty good price at the time, right? So if you had all those shares, your average fill price is probably somewhere around, I don't know, we'll say $2 or so, whereas you wanted closer to $3. So that's a lot of money with a lot of, if you're using a really large share count. So that's why we don't hit market on small caps unless you're paying attention to the level 2 and you know for certain that you're going to get filled and you're not going to eat up all the bids or asks depending on if you're selling or buying. Okay, so that's why we don't hit market on small caps. So with large caps, if there's like large share in here, like you're usually okay to trade Canopy, the S&P, any of those that have like pretty large share counts here. Like you're only going to get a variance of a couple pennies in your market sell. Whereas if you're doing small caps, it's going to just absolutely smash the bid or the ask in each direction if you're using a large amount of dollars. Even some of the smaller float ones, like I've moved like CanTrust and OGI, even with 2,000 or 3,000 shares, I've moved it 5 cents by hitting market, just because if I have a stop market in place or anything. So we're going to go over those in a second. So the other type is a limit order. So we'll just use S&P for example. So right now we're trading in 290.05-ish. So if you're buying 100, it's not going to make a huge difference. So for these purposes, we'll just probably put in, I don't know, maybe 290.10 here. And then we're going to hit buy. And then there, I got filled at 290.10, so that's good. The downside using limit orders is that if you miss where the price is, so if you put in a bid, so if I put in a bid for 210 right now, and then somebody's selling at 290.15, I'm not going to get filled. So if you really want to get filled, you probably want to put your limit slightly above where the ask is, or at the ask, if it's moving really quickly, or else you're not going to get filled properly, and then you don't want to have to go back and edit your order, etc. Because as we know, stuff moves really quickly sometimes. So that's a limit order there. So next we got stop losses. You can do a stop buy or a stop sell. Stop loss is for if you want to protect your downside. So in this situation, we'll say, maybe I'll take like a 100 or a 50-cent loss, in the S&P. So we pull this up here. We're gonna put in a stop loss. There's different, so you can put a price in, or you can put in a percent or dollar value, depending on which, what's easier for you to compute. So say you want to put a 1% stop loss in or something like that, just do it like that. If you want to do a dollar change amount, so we can do 0.5 here, so that'll be like a 50-cent drop in the share price. Or we can put in 289.5 for the stop price here. So this one is a stop market. So a stop market, it's going to work the same as a buy market and a limit buy. So with this, again, so you don't want to put a stop market in on a low float stock. You'll generally want to put a limit on. Most of the time I use stop markets just because if you put in a stop market and it skips over your price, it doesn't get filled. So if we put in a stop limit right here, so 289.50, and then we'll put it in at 289. So that means that once it flips over 289.5, so as soon as it sells, gets filled at 289.49, it'll try and get you the best price possible. At least that's what the brokers are supposed to do. And then this one, it'll sell anywhere in between 289.5 and 289. So that gives us a 50-cent move. Again, with the S&P, this will get filled pretty easily. But if you're using like a smaller cap float, or some of them will trade at really large spreads, like 30, 40, 50 cents, those aren't going to get filled properly. So it's just something you want to keep in mind. Again, keep an eye on the level 2. Keep an eye on how the stock normally trades throughout the day, just so that you're not risking either missing a stop or getting stopped out. way lower than you would like to, and then taking a much bigger loss than you would like. Okay, so that's stop limits. Next one we got is trailing stop. So trailing stop, the way it works is it follows your price up or down. So if you're, oh sorry, I should probably go over stop buys or stop buys too. So if you're short something, I don't know if my account's gonna let me. I'll see if I can do this here. So we'll do Facebook. Facebook's pretty liquid. Okay, so we're gonna try and sell this here. Okay, so we're doing a short position. There, so I sold Facebook short here. So that means I'm borrowing the shares from somebody, I'm selling them, and then I want the stock price to go down in order to make money. So with Facebook now, so we can put a limit buy here. So where's Facebook? So we'll have to pull up the level 2 here. The charts don't work on weekends for some reason, which is really annoying, or else this would be much easier to demonstrate. So we'll put it at 179. And then you're going to buy the shares back, not sell them. There. So I put a stop buy in there for Facebook. So if it goes up to 178, it's going to buy those shares back. And then the different orders all work the same in both directions, so I'm not going to go over them every time. Just they work the complete opposite, and you're going to hit buy instead of sell. So that's just how you do if you do a lot of shorting. Okie dokie. So we'll close that. There. So that's how we do that. What else do we have to go over? Okay, yeah, sorry, trailing stops. So trailing stops will follow your price up and then sell on a drop. So you can set in a percent or dollar amount. We'll just set one in for, I don't know, maybe 20 cents. So what that means is, so if it's going straight up, it's not going to sell you out until it drops 20 cents from the highest point. So we'll do sell. There we go. So if we get a drop in the S&P of 20 cents, it's going to sell out our position. It's a good to use trailing stops if the stock's doing really well going upwards and you don't have a chance to watch it. Say you're up, I don't know, maybe 2%, and then you have to go to work or something, you can throw on a trailing stop for, say, 0.5% or something like that, and then it'll sell out when it drops 0.5%. So you're going to guarantee yourself at least like 1.5% profit. And then if the stock keeps going up another 5%, you're still going to make all that money rather than get stopped out. So that's just how we use trailing stops. So these, when they say just stop, it's a stop market. So it's just going to get you out of the position. Or you can set a trailing stop limit. So, I want to do 20 cents, but I'll take a max of 30-cent loss. So that's what those are for. Probably won't go. These are just limit on open and limit on close. If you want to set in, like if you want to buy right at the open, and you'll take any price up 10 cents from where it opens, and the same as the close. I don't really use those too much. The other thing we can go over quick is a bracket order. You need more of an advanced dashboard to do the bracket orders, so you can set a profit taker and a stop loss on the same order. So how that works, there's a lot of stuff going on here. So you can do a limit or a buy here. So we'll just do market for now, and then you can set it up. So this profit taker, so we'll go back to S&P. It's easier to keep an eye on. There, so we gotta pull this back up. So over here, we're gonna put in 100 shares to buy here, and then we're gonna go to bracket order. What are we trading at now? So we're at 289.96. So we'll do 291 for our profit taker. And then stop loss we'll do 289 if this works. And then 289.5. I think Questrade makes you do a limit with the stops if you're doing a stop loss on this kind of order. So we're gonna hit buy. So this is gonna buy me 100 shares. It's gonna take profit, so it's gonna sell the shares at 291. And if it goes down to we'll do 280, 289. Let's see if that works. If it hits 289. Sorry, 288.5. There we go. It should sell us out. So we'll hit buy here. Don't show this again. So then this is your confirmation page. Takes profit at here, stop loss here, and we'll hit send. Nice, so it worked. And then your open orders down here will show up here, and then you can keep an eye on them just or if you make any mistakes. Last thing we'll go over quick is the durations. So that's here. There we go. Okay, so day, that means that by the end of the day, it's going to cancel your order if it doesn't get filled. Good till canceled means it just stays open until you close it. Good till day, I think that's good till the end of the day as well. This is good till extended market. So some brokers will offer extended market trading on US companies. Excuse me. So sometimes I'll have options open near the end of the day and then I can sell after hours. So that's the button you use there. This one here it fills you immediately and then cancels the rest of your order. So if I try and buy 100 shares at a certain price and it doesn't get filled at that price, so say I get 50 filled, the rest of the order is going to cancel itself so that you don't get filled on the way back down. And then this one is a fill or kill. So if you don't get your entire order filled, so if we don't get our 100 shares at the price we want, it just cancels the order and then you have to put it in again. Okay, so that's pretty much everything I need to go over, I think. Yeah, if you guys have any questions, feel free to ask. So takeaway points, large caps, most of the time you're okay to do market buys, but keep an eye on the level 2. Anything small cap or ones with large spreads, I highly recommend using limit orders, not market orders, because we can get really bad fill prices as you saw from that example. Okay, awesome. Thanks, guys. Let's make some money.